Video, I want to try to answer the question of whether we are in a stock market bubble in the first place, or if the entire stock market is going to crash, going to see a major correction and stuff like that. Or I'm going to show you some data as well, so you can take a look for yourself. But basically, you can go over to stockpenguins.com/heatmap over here, and you can see over here, like based on the time frames and stuff like that, how the market has been doing. I'm going to put it on the 1 year chart because I want to give you guys a perspective on basically the market data, and we don't want to look at it from a 1 day, 3 month point of view, right? We're going to look at it from a kind of extended point of view, just to see how overstretched this market really is. All right. So hopefully the software can load a bit faster. But as it's gathering data as well, I do want to talk about how the S&P is basically running up to all-time highs, right? Everybody is making money in the stock market. Everything seems to be fine and stuff like that. But at the same time, when everybody's making money, it's kind of a bad thing. Or it's not too good a thing, because it's like it kind of shows where there's still some room to go down, right? Because if everybody's making money, there's always due for a correction somewhat. All right. So on the 1 year chart, for example, you can see the biggest companies in the world generally take up majority of the index. So I would say that in terms of the technology play, you can clearly see the technology, including Google, Meta, Facebook over here, they make up a very, very large percentage of the index, which is not a good thing, right? If you think about it, it's like there are only a few companies, the Magnificent Seven, which are becoming too big to fail. And because they're just too big, right? For example, other people cannot compete, right? Or it's just that they can't compete. It's just that they're in different business models and they'll never grow into the valuation. So you can see here, for example, like Palantir even has become a massive company. It's $400 billion market cap, right? And a bunch of very, very small companies, or like much smaller companies in a sense. And where even though it's like 100 billion, $70 billion market cap, right? Over here, they look significantly smaller than the top dogs, right? So there's an outsized returns on the largest players. And this is, in a sense, wealth inequality, right? Where the top people make a lot of money and then everybody else does not make a lot of money. So that's number one, that's a bad thing. Because when something is too overweight, for example, then there's too much of a risk to depend on these names to grow. And it means that the overall economy is not growing, only some names are growing, right? And so these guys will basically make the majority of the wealth from this AI revolution, etc., etc. Okay, so that's the first thing where we can clearly see is overstretch of like, yeah, like Nvidia up 34% is okay because like the earnings are still okay, right? TSM 28%, Oracle 26%, and stuff like that. But you can see like even the big tech names over the past year, for example, they actually have not grown that much, right? Tesla is a different story; it's more a sentiment play. But Google, for example, you can see Google is like it has not grown, right? So it is not that these companies are not worth or value appropriately or inappropriately. It's probably like the market is just telling them that yeah, like they're putting a discount on this because of the business model. All right. So the second thing, yeah, the first point was that it's just there's some names that are too big. Number two is just that yeah, they're just some companies which are actually not growing in terms of the valuation. So not everybody is like making or growing in size in valuation per se. Not as frothy as we thought it is, right? Over here, obviously, double digit growth of the top names. But you can see everywhere else. Point number three is that everywhere else, there's a lot of red, right? AMD negative 33%, Brookfield here -4%, etc. You see a lot of red names over here, right? So you can see is that the people who win, they win very big. They win very, very big, right? And then everybody else who's not winning, for example, yeah, they're down. They're just like down. And it's like a very, very big percentage of the other companies, okay? So I would say that's the first data point that you can kind of look at. The economic indicators, even though the numbers may seem a bit botched or a bit fake, I would say, right? Um, Unemployment rate, for example. Okay, so unemployment rate is very, very important because this thing goes higher, it means more people out of jobs. More people out of jobs, consumer spending decreases, sentiment about the economy decreases, people cut back spending, and because the US, for example, is 70% consumer spending, right? So if this thing takes up, for example, and you can clearly see it is taking up, it is not a good thing. It's definitely not a good thing, right? From the low of what 4%, what is this? January, February, May, April. If we can maybe stretch it to the 2 year, hopefully this loads. You can see like it is slowly but surely increasing. So this is definitely a bad sign, and it's something that is stirring under the belly. I do believe this situation may actually worsen over time, and yeah, that will definitely affect earnings in the future. Okay, so clearly on a macroeconomic um, factor here, there's something wrong that's happening. All right, and then let's see the analyst ratings in terms of like the top companies in the world. So the top companies in the world, they are growing very, very fast, right? They are like plus 20, 30%, for example, over the past year, we saw just now. But if you see the amount of upside they have, right, analysts don't believe that Apple will grow that much. They only grow like plus 0.5%. So not very good, right? Something like Nvidia, for example, the top dog, right? Okay, 26% is okay. But if you cut out Nvidia, which is basically supplying the AI race, for example, right? Um, Microsoft, Microsoft 21%, okay, still okay. Maybe Amazon plus 25%. Okay, so there's kind of a mixed bag where there's some people who just say there's a lot more upside than a lot of other people as well. It's like there's not much upside here. Okay, so it's a mix of both worlds, and so that doesn't really give a very good view. All right. The other thing you want to look at is inflation rate. I do believe that there is inflation as well, and the inflation rate is a sign of how good or how bad things will come in the future. Because even if the inflation rate maintains, for example, which I do believe that this is false, I do believe that this is fake data, honestly, because stuff in the US is so expensive. Um, and a lot of people have been complaining on TikTok, which is actually where the real voice of what people feel are, right? I do believe that at this current pace, because of inflation from the past years, there's going to be a breaking point where people just stop buying, right? There was like really high inflation over the past year, but if you compare it before, for example, it's way higher than before. So when things get more expensive, people cut back on spending. They need to save more, and it becomes very unbearable to live. Yeah. So a bunch of these factors that are coming to play, right? Overall, if you just look at the heat maps, the data, and stuff like that, I do believe that we are definitely due for a correction. There will be a time where a lot of companies start missing earnings purely because on the consumer side is going to suffer quite a bit. And yeah, when that happens, then I think there will be a great correction over there. All right. If you disagree with me, feel free to let me know. But you can check out this data for yourself as well, and you can make your own judgment. But yeah,